Hello, how are ya? We'll get started here in just a second. Thank you for being here. I appreciate it. The green screen kind of makes me look a little weird, but hey, that's okay. We're here for the content. Hey, Hawk. Thanks for being here. And if you could hit the like button if I say anything that resonates with you, hit the like button. And if I don't say anything that resonates with you, then that's a problem. I don't want to waste your time. Let's see, what time is it? It's time to get started. Hello, welcome to the webinar. This is a webinar where I will go over the key differences between a 5-figure and a 7-figure trader. What is the mindset that you need to level up? What are some skills that you need to hone in on? Some emotional navigation that you need to do to level up as a trader. I hope it helps. Awesome. I'm glad it looks okay. All right. The mindset shift that builds 7-figure traders. And I'm Chart Gal Lori, and I'm part of the Chart Guys community. We teach technical analysis, and this webinar is brought to you free just to kind of introduce you to our community and to help you level up as a trader. How can I level up my trading? Why can't I become a 7-figure trader? What's holding me back? I've heard this for the 9 years that I've been trading. Well, if I had a lot of money, I would be making more money. No, not necessarily, probably not. You have to act like you have a bigger account. You have to act like a professional trader in your trading process and discipline and risk management in order to become a 7-figure trader. And having that mindset actually does hold you back. Success is walking from failure to failure with no loss of enthusiasm. That was a quote from Winston Churchill. And I've heard Dan say this, and it's definitely true. One of the traits that he has seen in the traders that we've watched go from $5,000, $25,000 capital to 7-figure traders, and we know several. I've met them personally. And those traders, one of the key characteristics that they had was they were absolutely obsessed with trading, and they stayed enthusiastic throughout the losses. And how can you do that? And we'll go over that. So the conundrum is you must approach the trading process like a 7-figure trader while having a small account. And there's this leapfrog process that you have to go through on the time continuum. And I'll show you that. What do successful large size capital traders do differently? They maintain consistency most of the time and navigate higher stakes and take on more responsibility. And I'll say that the consistency part, they maintain consistency. And let me tell you, I was like a chicken with my head cut off, running around to, oh my God, there's palladium. Oh my God, there's Dash Coin. Oh my God, there's marijuana. And it's not that I still don't jump from market to market, but I'm definitely more methodical. And I'll just go ahead and disclose this. I was kind of going back and forth whether to disclose it. In preparing for this webinar over the last couple of weeks, my trading has improved greatly. And I am just grabbing on to the principles of consistency, things I know to do. And, we all suffer from this human condition, but it has helped my trading. I've had the best trading week that I've had all year. And I attribute it to preparing for this webinar and going through the steps and really just kind of re-emphasizing the steps for myself and my own trading process. So this is the time continuum. I'm going to go ahead and hide my face real quick so you can see all of this. So focusing on preserving capital, if you have a smaller account, let's just say it's 5,000, 10,000, 20,000, and you want to become a 7-figure trader, and let's think of this line as a time continuum. I couldn't find an image, so I had to draw it myself, so just bear with me. This is the time continuum, and this is where you flip the switch right here, where you go from focusing on preserving capital to playing to win. So when you're focusing on preserving capital and you're beginning trading, or let's just say you've been trading 5 or 6 years and you haven't leveled up, you haven't learned to lose yet, most likely. You're learning technicals, you're developing and honing your edge, and you're becoming process focused. And when the switch turns on, then you go to this right side of the time continuum. You're playing to win. You're focusing on high conviction trades. You're focusing on refining your exit strategies. You're increasing your risk tolerance, and you're learning other markets. So on the time continuum, it's this line of demarcation here in the middle that separates the inconsistent traders from the consistent traders who actually are high performing, and their results show it. Acknowledging limitations. We have to start out with acknowledging there are limitations when you have a smaller account. You are subject to pattern day trader status with an account of less than $25,000. Oh, by the way, I'm just going to pause right there. If you have questions for me, put them in chat. If I don't get to them immediately, I have Chart Guys Rav, and there's some other chart people around that'll help me gather the questions. I definitely want to answer any questions that you have. So just know I can't look at the chat and go through this. I can't walk, talk, and chew gum at the same time. I am from Louisiana, but just put your questions in the chat and we'll get to them. So you're limited with pattern day trader status, and there's ways to work around that. If you're not on margin, you can trade multiple times in a day. You just have less capital to do it with, and that's not necessarily a bad thing. You're forced to be picky with trade setups, and that's not a bad thing. I get messages. I got a message today. Hey, my edge is looking for oversold conditions in blue sky breakout, looking for back burners, and I didn't get any today. So what do? You don't trade. If your edge is not present, you're forced to be picky, and that is a great thing. It makes you feel like, well, crap, I'm not making money today. Well, guess what? You're not losing money either. Another limitation with smaller accounts, and it's actually with larger accounts too, you always need to be focused on higher time frames, but focusing in on the lower time frames, you really can't afford to do that with a smaller account. You have the lack of experience, lack of screen time, hours in the seat, which can't be replaced by any webinar. It is my contention that you cannot replace screen time with education. Education helps mold you, get you better, absolutely. But there is no replacement for screen time. And then just overall lack of capital. You have personal needs, you have personal expenses, and you're trying to balance that capital requirement with the capital that you have for trading. Hey, Mao, you still alive and kicking? I guess I could show my face again now that that part is, that screen is over, that slide. Futures and options, this can be an option. This can be an alternative for you if you have a smaller account. Futures are not subject to pattern day trading, and they do not require a ton of margin. They do require some margin. They're great for smaller accounts. However, these are the more difficult instruments for newer traders to master. If you have not mastered risk management, stay away from futures. That is my public announcement. My PSA for today is, if you have not mastered risk management, stay away from futures. If you are a awesome risk manager and you stick to your rules and you're disciplined, then futures are a great way to level up your trading. You're taking on a little more risk with the tick and the tick value, and you're not subject to pattern day trading. However, options, you are subject to pattern day trading. Futures options, you're not, but that's a whole nother ball of wax. But options, you're subject to pattern day trading, and it takes less capital. However, with options, it's stacked against you with the Greek army, with delta, theta. You're constantly getting theta decay. You have to be right, and you have to be right quick. So it does have some disadvantages. They're great tools to take advantage of for high conviction setups based on high time frames. So we talked about the limitations. Let's talk about playing to your strengths. So playing to your strengths, you need to amplify the discipline with a refined trading plan. Enhance your risk rule with a detailed trading plan to maximize discipline. And am I giving you homework to do outside of trading? Absolutely. It's the most important work that you do. I mean, doctors go to school for 14 years before they step into a surgical suite. And with trading, we just start trading day one, and we could be subject to our own disasters. So leverage technical analysis with advanced tools and critical thinking. This is something that I have observed Dan do over the years, and I've observed within myself things that I have picked up in trading that no one taught me. Just for example, the faux head and shoulders. Sometimes when you have a bull flag on a higher time frame, you have a faux or a fake head and shoulders on a lower time frame. No one taught me that. It's just from hours in the seat and applying critical thinking. There was no tool drawing that head and shoulders for me. It was something I had to recognize. So we talk about tools and technical indicators a lot, but there's some critical thinking that goes along with those advanced tools and being able to leverage that, like correlations, looking at stronger markets versus weaker markets. Today, the Russell was on fire. It got a weekly bull break, and notice, okay, it's small cap day. So if I see small caps that are close to breaking out, this may be a time to go focus on something like RKLB, that a blue sky breakout today because the Russell was doing well. That critical thinking is important, and applying problem solving to optimize as execution. OCO orders, one cancels the other. Just looking at what type of problem solving skills to optimize execution. Alerts. I got a message today. How did you find Walmart was oversold? I set an alert back in December when Walmart was screaming higher. I wanted to know, tell me every time it gets hourly oversold. Does that mean I'm going to trade it? No. That just means I'm going to go look at the chart and see what's going on. And today we're looking for a daily high or low. That trade setup didn't pan out today, but it's something on my watch list. So I'm leveraging the tools that I have to help me become a better trader. Set up orders to be filled if key levels are hit. Just as an example, you could do this with theoretical pricing for options. So if I wanted to get in Amazon today, which is something I talked about yesterday on the pregame show and in the live stream, if I'm looking at Amazon, and let's say the Amazon calls, the 215 calls, I'm just going to make it up, are $4. They're going for $4 yesterday. And I say, okay, I want to pull back. I want a $3 drop. And then I go into Thinkorswim and I look at theoretical pricing and I say, okay, that option would then be about $2 per $215 call. So I'm going to put an order in, a limit order, fill me when or if it hits $2 per call. And that is a way to set up orders to be filled at key levels if they're hit. Yesterday, CRCL, waiting for that. I mean, I pounded the table on that yesterday morning when Circle was $227. I said, I'm not interested in Circle unless it breaks $200 psychological because it's short sell restricted. So the short selling is a little more methodical. And when we hit psychological levels like that, we sometimes get a flush and bounce. And I was waiting for that yesterday. I closed the mic and said, I'm not looking at Circle until it hits $200. I set an alert for $200. I watch it flush and then I enter. So you can set up orders if key levels are hit, and you can set an immediate stop loss as soon as you put the order in as well. Okay, thank you for that, Rav. How to trade options, beginner's guide, and first steps in trading. We have a lot of free educational resources on our website, chartguys.com, if you want to check that out, and I'll remind you a little bit later as well. Channel motivation into consistent wins. Sometimes we get motivated, we have a big week, and then we blow ourselves up the next week. Let that fuel you for that consistency, fuel your motivation to crave more consistency, because it's about consistency. It's not about, oh, I made a lot of money this week, so let me bet more next week. That's not what it's about. You can counter overtrading with psychological habits, use mindfulness and journaling to reinforce patience and detachment, curbing those FOMO-driven trades, and find ways to minimize offset weaknesses. I have traders I've worked with where I had a trader who was a professional poker player, and I said, okay, get 3 poker chips, put it on your desk. And he was over trading. When you're out of chips, you're out of trades. You can do he was I think you call it a multi-hand player. So he was online. He was used to playing a lot of hands. So it was, kind of fueling his over trading. So find ways to say, okay, this is one of my weaknesses. Now, what type of bumper guards am I going to put on myself to ensure that I don't succumb to these weaknesses? Keeping it simple. And this is sometimes counterintuitive. You think, okay, I'm leveling up my trading. I want to trade bigger. I want to be a better trader. So I need more indicators. I need more tickers. I need more setups. No, actually, it's the opposite. Keeping it simple is critical, and it is a common denominator. And I have a conclusion slide where I look through the common denominator that I see in our seven-figure traders that I'm familiar with, and then what I have found to work is they keep it simple. They keep it painfully simple. As a newer trader, we tend to overcomplicate the process. And fewer tickers, that doesn't mean that you can only trade one or two tickers for the rest of your trading career. It just means you get focused in on maybe a hype sector like quantum or crypto. And you can bounce around to hype sectors, but keeping it focused where, for example, if you trade NEO and BABA, if you trade, let's just say NEO and Rivian, and you're focusing on EV names, you need to know when NEO opens, because it's an ADR stock, it takes a while for the market orders to become orderly and for it to populate. And so you're going to have a delay in your ordering. Well, you wouldn't know that if you just jumped in to trade NEO tomorrow. So you need to know the characteristics and, forgive me for saying this, but the personality of tickers. And tickers do have a personality. Right now, PLTR's personality is pump and dump at the open, pump to a new all-time high today, and then it pulled back. You have to know the personality of the ticker. Capitalizing on hype markets. This is something that's definitely a common trend, a common denominator. I said trend. We have a great trader, Trend, and we have his story on our website on how he became a seven-figure trader. And what I see and what I've personally done myself is capitalizing on hype markets. I think it was January of 2019. I was my first marijuana market where I actually was able to capitalize on it. And right before that, it was in 2018, it was Riot, Mara, when they first started coming out. So I went from Riot to Mara, and then I went to marijuana, and just moving around to the hype markets. And I saw Dan do it. He motivated me to focus on hype markets and learn how to adapt my skill set for whatever is moving. When it's a boring market, I don't see seven-figure traders hanging around. You'll see them step into the room and let you know they're there. You'll see them posting in commodities when gold is in a tightening pattern or breaking out. They know where to go to find these unique opportunities, i.e. high conviction setups. And as of late, we've had new IPOs like CRWV, Circle, Bull was a SPAC, and it ran hard when it first opened. We have opportunities. They're not just hype markets. Sometimes they're just newer IPOs that have some hype behind it. Larger capital advantages. With larger capital, you can scalp and make the trade worthwhile. You can do some minor scalping and make it worthwhile. However, with larger capital, a con is it tempts you to average down. No averaging down just because you have a larger account size. That is a death wish in trading. Don't step in front of a steamroller to pick up pennies. It's something we have to remind ourselves. With larger capital, we get a small scalp and we're like, okay, we got a day maker, and that's great. You can quit for the day. But we don't want to be putting ourselves in unnecessary risk just to pick up pennies. So if you're trading a name that's getting halted a lot, like CYN today, and you're just scalping 10 cents off a name that ran up to $42 today, that is not worth the risk to reward. So you have to constantly weigh that. Yes, smaller scalps can get you it can make it worthwhile and get you a day maker, but what are you risking to do that? Trading to win versus not to lose. I could make a whole presentation just on this one concept. And this is something that's really hit me in the last few years. That on that time continuum, when you're first starting out and you're focusing on capital preservation, you're just trading not to lose. And then when that switch goes off, that demarcation line, and you go playing to win, it's completely different. You understand from hours of experience that this is what a loss feels like, and this loss is not a result of my poor decision making. That loss is a result of just what happened in the market. We don't know who's on the other side clicking the buttons buy and sell. We don't know. So we understand that losses are part of the process, and it doesn't demotivate us in our trading. Winning traders play to win. It sounds simple, but most traders trade not to lose. And when you learn how to lose, and you learn how to lose well and minimize losses, then you can level up trading to win. And I would say I've kind of gone back and forth in my head how many slides are the most important slide. For me, this was when I flipped the switch, when I started trading to win and not to lose. Offense is important to level up. Defense is critical to stay in the game. And there was Paul West, I forget his last name. It was West something. He was an Oregon men's basketball coach, and he could care less about defense. They called him the runner and gunner. He just ran his offense up and down, and he would have over 100 points. His team would have over 100 points a game. And he was just killing the competition. And he was leveling up his team through offense. In trading, you cannot forego defense. It's critical. You must play defense. But the offense is where you're going to go to become a 7-figure trader. Trading to win versus not to lose. Reframing losses as feedback. View losses as learning opportunities, not failures. We want to reduce fear of losses and build confidence that your system has parameters and bumper guards around it, that you won't lose enough for risk to ruin, where you ruin your account. We just want to use that as a way of saying, okay, this is what a loss feels like. This had all trades have some probability involved. It didn't go my way. I followed my rules. Keep it moving. Keep it moving. Focusing on high probability setups, trade only well-defined, back-tested setups to prioritize wins over loss avoidance. I'll say that again. You want to prioritize wins over loss avoidance. We try so hard not to lose that we forget we're supposed to be winning. Build risk confidence with smaller positions, and it's a great way to start putting your arms and fingers touching around losses and accepting losses as part of the process. Is just size down. Practice pre-trade visualization. And I have not met a successful trader that I've gotten to talk to in depth that has not mentioned this in some form or fashion. They visualize. I do every morning. How do I want to feel at the end of the trading day? Do I want to be kicking myself because I didn't take my high conviction trade? Do I want to be kicking myself because I took a big loss because I didn't want to be wrong? They visualize themselves as a high performing trader. And it shifts their focus from loss avoidance to winning. Reinforce wins with lifestyle habits. Use journaling, exercise, and profit allocation to sustain a win-focused mindset. Oh, extra bullet there. Sorry about that. Focusing on the process. It's not just clicking buttons on hunches and intuition, just looking at it, pulling up a chart, a 5-minute chart, and saying, man, it just broke bull. I'm entering long. No. What's the larger term time frame tell you? It's a 4-hour low or high, the more likely scenario. Then why are you entering on a 5-minute bull break? I mean, there may be a reason, but you need to have an edge, and your system must be clearly defined. Make a checklist to ensure all necessary components are present before entering the trade. I've shared before, I've worked with a few therapists, and I brought my trading journey to them and my, barriers that I was having to get to the next level. And of course, the therapist I work with, they did not have trading experience. And one of them was an older lady, and I guess I'm an older lady, but she was an older lady, and she was like, well, in trading, like, don't you have these doodads that you have to have? I'm like, yeah. She's like, okay, well, make a checklist of the doodads, and you don't enter a trade till all the doodads are checked. I'm like, okay, you don't even need to be a trader to know that. So having a checklist is important. And this is just something I grabbed online just to give you an example. Looking at the market perspective and context, what's your entry strategy? How are you going to manage the trade? How will you evaluate how will you exit? And once you exit, how will you evaluate the results and the process? And did you follow your rules? Did you have any emotions that came up during the trading day? And that's one of the things that Jared Tendler really drives home about journaling emotions. When I have FOMO, I journal. I have my journal right here, and you can do it however, makes sense to you. If it's not written, if it's through a spreadsheet or some type of notes app. What is that? Flowy? There's some type of notes I used to work. Dang it, I can't think of it. Where you just type in your notes and it's just consciousness of thought, and you just put in there, today I felt FOMO. I saw Susie Q or Jack or Larry. I saw them trading CYN and I missed it. And you journal how you feel. So it's important to say, okay, I had FOMO. What would have happened had and this is part of cognitive behavioral therapy, CBT, is what would have happened had I chased CYN? I would be sitting on a big loss by the time I saw it, and I would have traded it. This is all hypothetical. I would be sitting on a big loss. Okay, well, I'm glad that I didn't succumb to FOMO. Avoid resulting. So I have a list of the books that the 4 books I would say were the most important on my journey. I'm an avid reader. I read about 20 books, well, maybe 15 books a month. I read a lot, and most of it is through Audible. I listen while I'm trading. I listen while I'm driving, while I'm folding clothes, whatever. But I would say 4 books have really shaped who I am as a trader and have helped me the most. Of course, I have my mentoring that I've gotten from Charting Me and Dan, my peers that I've traded with in Chart Guys community. I have followed people on YouTube, and it's all part of the educational journey. They all provided a key puzzle piece to my journey. And in Annie Duke's book, Resulting, this was an aha moment for me when I read this book, Thinking in Bets. Resulting refers to the tendency to equate the quality of a decision with its outcome. This means judging a decision as good or bad solely based on whether it led to a favorable or unfavorable result, rather than assessing the decision-making process itself. This can be problematic because outcomes are often influenced by chance and external factors, not just the quality of decision. So Annie Duke is an amazing professional poker player. I think she's retired. And you can apply this concept from poker to trading. Poker has an element of chance to it, just like trading does. But if you make the best decisions with the information you had at the time and you followed your process, then you didn't make a bad decision just because you lost. And avoiding resulting is something that 7-figure traders consistently do. They also have a healthy detachment from money. Healthy detachment from money boosts trading success by fostering objective decision-making, resilience, risk, discipline, consistency, balance, and it counters that scarcity-driven mindset and scarcity-driven overtrading. Steps you can do to cultivate a healthy detachment. And I should pause there. I did this. I got this quiz on Instagram or something where you type in a question to AI. I did it on Grok, and it asked me these questions, and he, she, whatever AI is, they prompted me to go through a deep dive of scarcity versus abundance and my issues that I do have with scarcity from how I was raised. My dad was a diesel mechanic, and I have deep-seated issues over money, and I'm constantly pushing myself with education, with work, and that's why I'm so driven, because I don't ever want to be without money. I need money. But it's not, I'm wearing an Amazon tennis dress right now. It's not like I need Gucci stuff. I'm not a Lambo driven person, but I want to make sure that I'm secure. And understanding that scarcity mindset, and money equates to energy, not to get too far off topic, but money equates to energy. And if you're constantly putting negative energy into your trading process, that you need X dollars to pay the rent or this or that, maybe I will get off topic. No, my ex-husband, when we were dating, he was in between computer jobs, and he did some jobs on the side for $15 an hour as an electrician's assistant, even though he was a network engineer. And we would go out on a date, and he would buy a pizza, and he'd be like, that was 1 hour of work. He was really attached to money, and what I was like, well, I better be funny and make this a good date, because he's saying he had to work 3 hours for this date. And trading sometimes is like that, where we force, okay, I need, $1,000 for my child's tuition, or and it is just a recipe for disaster. You have to detach in a healthy way. You need to understand the ramifications if you were to do something that was risky. But as Dan says, sometimes we just need to think of it as video game points and detach from it in a healthy way, so we can get those trading successes. Focus on and meditate for emotional control, cap your risk in a very strict way, and separate trading from lifestyle. This is not about wanting to buy that car or wanting to buy a Rolex. I need to get X dollars to take my girlfriend on a vacation. That type of association of money to trading results is just not a healthy thing. I see some questions coming out. I will try to get to those in just a second. Abundance versus scarcity. Scarcity attitude, a belief that opportunities, capital, or success is limited. It's driving a fear-based trading. You fear on missing out, on losing money, equating your P&L to self-worth. I've never seen a P&L make you money. And I have stared at P&L just about as much as anybody else. It's never made me money. Charts make me money. So that scarcity attitude of just staring, you're like holding on to the table, the desk, like, I need that money. It actually brings about negative results. Abundance attitude, a belief that opportunities are plentiful and losses are temporary. It fosters confidence, discipline, and consistency. Shifting, like 7-figure traders, shifting from scarcity to abundance reduces overtrading, improves risk discipline, and supports capital growth. And this was my other trading to win, and then getting that abundance mindset. Those are the two slides in my head were the most important for this presentation. And this was the third one, patience. Practicing pre-trade mindfulness, enforce strict trade criteria, implement a trade delay rule where you wait 30 to 60 seconds before you enter a trade, check that your doodads are all there. Optimize your trading environment, minimize distractions. If Twitter or X is making you compare yourself to some type of hoo-ha out there that they're making X dollars on this and you're like, God, I suck. Minimize the noise, optimize your trading environment, get rid of the distractions, adopt lifestyle habits for patience, build patience outside of trading with exercise, sleep, and journaling to reinforce calm. Have that patience, but when you see your pitch, step up to the plate and swing hard. SMB Capital has this in their lobby from what I understand, and I know why they have it there. You're waiting for your pitch, but when you see your pitch, and my pitch yesterday was CRCL, breaking $200, step up to the plate and swing hard. Accountability model. We could talk about this for hours. We won't. I will go over this briefly, but a personal accountability model. Den shared something like this in our mindset channel, and I really liked it. I see so many traders stuck in this victim loop, and I'll just make it real simple. Get out of this loop. In life, in trading, in relationships, get out of it. You will not be a successful trader if you're stuck in this loop. I can guarantee it. Justin Wilson, Louisiana. I can guarantee you will not be a successful trader if you're blaming market makers, if you're blaming your financial situation, you're blaming all these other things, Trump and his tweets or whatever. That is not the reason why you are not a consistently profitable seven-figure trader. In order to become a seven-figure trader, you need to have accountability for your actions, your decision-making, your account, period. And accountability comes in with journaling trades and emotions. Look for process deviations and don't blame others. Adaptability, another common denominator in seven-figure traders, they adapt. They adapt when market conditions change. They don't keep doing the same thing over and over and over. A year ago, I had some traders talk to me about my beach ball setup where I'm looking for names that are getting pushed down at open, they're gapping down and they're having a flush, and I'm looking for that beach ball effect where you try to push a beach ball underwater and it pops up. That trade setup worked so well until it stopped working. And then it's like, okay, I'm going to go to the next trade setup. So understanding and adapting when things change. Your system may stop working, and you need to recognize that sooner than later and then adapt. Continuous improvement, seeking support systems. This doesn't mean continuing on the tireless quest of seeking the holy grail indicator. Guess what? It doesn't exist. Or trying to find trading alerts from people, that you pay on Twitter to say, buy Amazon, sell Meta. It's continuous improvement over your process. That's what we're after. Support is important for maintaining your trade successes. Get a trading buddy, a community, a therapist, whatever works for you. Seek out support on your trading journey. Cut out the noise. Cut anything that's not serving you or your trading journey. We have several seven-figure traders that have shared their story. We have a link, and we can put this in chat. Trend is one of our traders. Love his name. And when Trend posts, I'm like, what did he post? He's so dang good. And here's Trend. We have Trend's story on our website. And Chart Guys has many free educational resources. So I saw someone ask, I'm a newer trader. Where do I start? Start there. Don't pay for education right out the get-go. There's tons of free resources out there. Start there and understand the basics of trading and paper trade, paper trade, paper trade. Don't put, and yes, that was loud, don't put real risk, real money at risk. That's a very expensive tuition before you have a back-tested system and edge that you understand clearly and fully and what tickers you want to apply that system to. Don't start trading with real money. Conclusion, high-performing traders, they are patient. They are patient. My dad is one of the best hunters I know, and he is a great hunter because he is patient. One of the things that just hit me this past week was he would like have us climb up a tree, or he would climb up a tree. We were in Louisiana, so it was flat. When we'd go to Missouri, we would have hills, and we'd go to the top of the hill first and scout out. Isn't that the same thing when we look at higher time frames? We would scout out the lay of the land first, and then we would drill into what opportunity we were looking for, patch of thickets or whatever. And then we'd have to be patient. We'd sit out there all day and never see a deer, and we'd go home. We wouldn't shoot at anything that just started moving. You'd have to see, is it a buck? Is it a doe? Is it a fawn? Whatever. So they are patient. They hold themselves accountable. They do not blame others. They manage risk like a freaking boss. Kids, freaking is a bad word. They know their pitch. They know what pitch they're looking for. I played softball, and I like fastballs, high and outside. I knew what my pitch was. And in trading, you have to know what your pitch is. Then they step up to the plate and they swing hard. They don't compare themselves to others. They stay focused on process, and they keep their emotions in check and consistently work to improve. Books that help me level up. The Mental Game of Trading by Jared Tendler. Love that book. I love the inchworm concept. If you don't read anything in that book, I would read the inchworm concept and how we're constantly flattening out in our process of trying to improve and we're not moving anywhere, and how we have to make more minor adjustments, like on your golf swing or whatever. Trading is the same thing. To improve, we need to work on the just small, finite bits and chunks of our process. Thinking in Bets, love that book by Annie Duke. Best Loser Wins by Tom Hogard, and Trading in the Zone by Mark Douglas. So now we'll go to questions. It was interesting going back and looking October 23rd, 2021. That's when I bought Mental Game of Trading. It's interesting how it matched up with leveling up that I saw in my trading process in these time frames. Thinking in Bets, June 2020, Annie Dukes, loved it. Best Loser Wins, April 29, 2023, loved that book. And then I bought Trading in the Zone so long ago, it didn't even show up. And don't forget to give me a follow on X at ChartGalLori. And now I'm going to go to questions. Excuse me. All right. I don't think the cannabis market is heating up right now. If anything, MNMD, the psychos, I can't say that, but the mushroom sector is heating up a bit. This has a daily squeeze, and on the weekly, we're looking for a higher low. So I like that chart, but if you go look at the marijuana charts, they're horrible. They're terrible. Doesn't mean they're not going to pop from here, but when they pop, look at all the bag holders that we have up here. So I definitely like the psychedelic space. Hey, Hunter, I'm glad you're here. Awesome, Mal. I'm glad you got part of platinum. Platinum, I was banging the table. When did I start banging the table on platinum? That was a few months back. Platinum was an amazing, look at this monthly squeeze. I banged and banged the table on this one. This was just an amazing, and we even went out to the 6 month. I think it had a squeeze. The 3 month, 6 month had a squeeze. Quarterly had a squeeze. It was a beautiful trade. But absolutely, you can trade from a fundamental perspective. God, the quarterly breakout was beautiful. You can trade from a fundamental perspective, but regardless of the perspective you're coming from, stop losses are still absolutely necessary, in my opinion. Not my opinion, they're necessary. It is a very expensive form of therapy. Absolutely right, Robert. Robert says trading is a very expensive form of therapy. I tell people it forces you to, it's like looking in a mirror and you're looking at all your bad qualities and you have to fix them. You can't fix all of them, nobody's perfect, but you have to work on emotional intelligence. I'll admit that was one of my issues. I'm working with people like Charting Man Dan, who has a very high EIQ, emotional intelligence quotient. And I know that's one of my weaker areas. And I have read the book, the EIQ book. I have taken many tests and I have looked to offset my weaknesses in emotional intelligence. And you have to address the therapeutic issues that you have personally. Like for me, self-sabotage is another one. I have issues, deep-seated issues with money from how I was raised. I am a master and queen of self-sabotage. And emotional intelligence is not my strength. But it doesn't mean you have to be a perfect person in order to trade. You just have to work to offset those weaknesses. Oh. You can screenshot it, JMac. If you want me to go back and look at anything in particular, let me know. Yeah, hit the like button, please. Maybe the books, maybe that is what you wanted to screenshot. You got in April 8th. Awesome. Awesome, Mal. Yep, weed stocks need a catalyst. You are right, my friend Dragon Man. Good. I'm glad we've gone 45 minutes. That's exactly how long I wanted to go, but I'm here for you if you have questions, but we'll go ahead and wrap this up. If I see any questions from members, I will definitely answer those. My throat's kind of going out, so it's a good time to wrap it up. Check us out on chartguys.com. And if you want to give me a follow on X, at ChartGalLori, and then again, our website, chartguys.com. We have a ton of educational resources that are free. We are not the Lambo, Rolex. Well, it's not going to pull up, or my computer is, there it is. So chartguys.com, and we have a ton of free resources here for you to check out. So perfect, Dr. Harry, perfect. Awesome. And Rav, he just put in chat the top 10 trading books. There's a link there. Articles. We have a ton of articles you can read, and they're free. All right. Thank y'all for being here. I appreciate it. I'm such a dummy. I had on a green shirt, and I'm like, why is this looking weird? And it's like, duh, you have a green shirt on. You're using a green screen. So, you know, sometimes the blonde dye seeps in. Y'all have a wonderful day and use stop losses.